If you are in the market to buy or sell a home, before you apply for a home mortgage loan, it's important to learn the differences between the products that are used to value your home. Understanding the difference can help consumers recognize the level of risk in the various valuation products. There are several products: appraisals, another type of appraisal called a hybrid or bifurcated appraisal, automated valuation models, broker price opinions, comparative market analysis, and evaluations. Let's discuss each one. An appraisal is an opinion of value performed by a professional, qualified appraiser. An appraisal complies with the uniform standards of professional appraisal practice, which is commonly known by its acronym, USPAP. They are a set of standards that require appraisers to be independent, objective, and impartial. The U.S. Congress has recognized these standards as our nation's generally recognized valuation standards. To ensure they are relevant, the standards are reviewed and updated every 2 years. An appraiser must remain unbiased and produce an opinion of value that is credible or worthy of belief. An appraisal by a qualified professional appraiser is considered the gold standard of valuation products. An alternative type of appraisal product is a hybrid or bifurcated appraisal. In appraisals of this type, someone other than the appraiser performs the property inspection. Individuals performing inspections for these assignments are generally not credentialed and are not subject to regulatory oversight. After the inspection is completed, a qualified appraiser uses the information from the property inspection, as well as other important data, to perform the analysis and develop an appraisal that complies with USPAP standards. Although borrowers are entitled to receive a copy of the appraisal or other valuation product used to evaluate the loan, it may not be readily apparent what type of appraisal was used. You can ask your lender what type of appraisal was used in your home mortgage approval process to better understand this element of the home buying process. The next valuation product is Automated Valuation Model, or AVM. It is created by a computer to estimate a property's value. A lender might use an AVM in some circumstances to assist in evaluating the risk when offering a mortgage loan to a consumer. The results of an AVM are heavily dependent on the quantity and quality of the data that is being used. With proper use, an AVM can help support the findings of an appraisal, but when used alone, its results may not be credible if adequate and relevant data is unavailable. Another valuation product is a broker price opinion, or BPO. It is typically prepared by a real estate broker and is another tool a lender might use to evaluate a loan. A BPO, as originally intended, does not comply with USPAP. Unlike appraisers, real estate brokers are not obligated to follow USPAP and its appraiser independence requirements. BPOs were designed for brokers to assist home buyers and sellers in arriving at a list or purchase price. Next is a comparative market analysis, or CMA. It is similar to a BPO and is commonly prepared by a real estate agent to help decide on an asking or offering price. Like a BPO, a CMA does not comply with USPAP, and real estate agents are not required to follow USPAP. Yet another valuation product is an evaluation. Evaluations are a creation of the federal banking regulatory agencies for mortgage loans that do not require appraisals. If a mortgage loan is above a certain dollar amount, currently $400,000, federal law requires many banks or credit unions that are regulated by the federal government to include an appraisal that is performed by a state-qualified appraiser and follows the standards of USPAP. For mortgage loans below the $400,000 level, banks may use an evaluation instead of an appraisal. They are very similar to appraisals, but are not required to comply with USPAP and do not have to be performed by a state-qualified appraiser. Those are the main valuation products in real estate. However, consumers should also be aware of appraisal waivers, even though they are not a valuation product. An appraisal waiver is used when a bank offers to forego the appraisal requirement for eligible mortgage loans, including mortgages purchased by Fannie Mae and Freddie Mac, which are the largest government-sponsored enterprises that purchase mortgages. Fannie Mae and Freddie Mac provide stability for the housing market by helping to ensure that funding is more readily available. This is critically important to note. A borrower has the right to reject a waiver and have the security of a gold standard appraisal. Despite an appraisal waiver being offered on a home mortgage, Fannie Mae and Freddie Mac still perform valuations that use in-house, exclusive analytics and deep stores of property data. Of course, this is just a start when beginning to learn about valuation products. For more information, please go to our website, appraisalfoundation.org. Thank you.